Hello everyone, and welcome back to the channel where we dive deep into the fascinating world of how to borrow stocks and potential short squeeze setups. Today, we're putting a specific company under the microscope, one that has popped up on our proprietary screener due to some truly eye-popping borrow fees. We're talking about CCTG Technology International Holdings Limited, trading under the ticker CCTG. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So let's get acquainted with CCTG. CCTG Technology International Holdings Limited operates in the industrial sector, specifically within electrical equipment and parts. This company, with the current market capitalization of approximately $3 million, designs, manufactures, and sells interconnect products globally, including original equipment manufacturer and original design manufacturer interconnect solutions. Looking at recent price action, CCTG has been quite volatile. Today, it saw a dip of -10.5%, extending its decline over the last 5 days to -15.35%. However, zoom out a bit, and the picture changes. Over the last 30 days, CCTG is actually up an impressive +61.57%. Volume-wise, today saw only 137,400 shares traded, which is a tiny fraction of its 30-day average volume of nearly 11 million shares. What is cost to borrow and why it matters? Before we get further into CCTG, let's quickly explain what cost to borrow or CTB means, especially for our newer viewers. When a short seller wants to bet against a stock, they first have to borrow shares from a broker. Just like renting a car, there's a daily or annual fee for borrowing those shares. This is the cost to borrow. If a stock is in high demand to short, or if there are very few shares available to lend out, that fee can skyrocket. It's a simple supply and demand dynamic. When these fees reach hundreds or even thousands of percent annualized, it signaled extreme scarcity and high conviction from both sides, those wanting to short, and those with a limited supply to lend. It becomes a ticking clock for short sellers, as those fees eat into any potential profits, and quickly. Why this stock is hard to borrow right now. Now, let's talk about why CCTG has landed on our hard to borrow screener. For CCTG Technology International Holdings Limited, the current annualized cost to borrow fee stands at an astonishing 614.6%. Highlight CTB not only is that number incredibly high, but it's also seen significant momentum, increasing by 8 percentage points over just the last 5 trading days. This indicates that the cost of shorting CCTG is rapidly becoming more expensive. The supply situation is even more critical. At the time of this recording, there are only 7,000 shares currently available to borrow. Compare that to the estimated float of 3.0 million shares for CCTG, and you can see how incredibly tight the supply is. Our internal composite squeeze score, which factors in CTB level momentum, borrow supply, float size, volume/price momentum, and technical setup, currently sits at 40.3 for CCTG. While not the highest score we see, it definitely highlights a stock with some very unique borrow dynamics. Squeeze mechanics explained. So, what does it mean when a stock is hard to borrow with such high fees? It sets the stage for a potential short squeeze. Here's how it works. Short sellers borrow shares and sell them, hoping to buy them back later at a lower price to profit. But if the price starts to move up, or if the cost to hold their short position becomes unbearable, they are forced to cover their shorts. Covering means buying back the shares they initially borrowed and sold. If many short sellers are forced to cover at the same time, this creates a surge in buying demand. In a stock like CCTG, with only 7,000 shares available to borrow and a 614.6% CTB, any significant buying pressure could quickly overwhelm the limited supply. This forced buying creates a feedback loop, driving the price even higher, which in turn puts more pressure on other short sellers to cover, leading to a squeeze. It's important to remember, however, that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have very strong conviction that the stock price will eventually fall, and they are willing to pay a premium to maintain their position. Dilution risk check. One of the most critical checks we perform for any potential squeeze candidate is dilution risk. Dilution refers to the issuance of new shares by a company, which increases the total number of shares outstanding. This typically reduces the value of existing shares and can completely negate a short squeeze thesis. More shares in the market mean it's easier for short sellers to find shares to cover, or for new short sellers to enter the market, thereby relieving the pressure on the borrow rate and the stock price. For CCSC Technology International Holdings Limited, CCTG, we have good news on this front. Our check found no recent dilutive SEC filings such as SMINUS1, SMINUS3, or 424B in the last 90 days. Furthermore, we found no recent reverse split for CCTG in our look-back window, which is another factor that can sometimes impact a stock's short interest dynamics. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, if you're tracking CCTG, what should you be watching? First, keep a very close eye on the cost to borrow fee. Any further increases would signal even greater pressure on short sellers. Second, monitor the shares available to borrow. If that already minuscule 7,000 share pool shrinks even further, it's a strong indicator of intensifying scarcity. Third, volume. Remember, today's volume is a tiny fraction of its average. A sudden, significant increase in trading volume, especially accompanied by positive price action, could be a catalyst. And finally, of course, watch for any company-specific news or broader market sentiment changes that could impact CCSC Technology International Holdings Limited. CCSC Technology International Holdings Limited, CCTG, presents a fascinating case study in the world of hard-to-borrow stocks. With an eye-watering 614.6% cost to borrow and an extremely limited supply of shares, it's certainly on our radar. While high borrow fees don't guarantee a squeeze, they undoubtedly create a high-pressure environment for short sellers. Remember to always conduct your own thorough research. We hope this deep dive into CCTG has been educational. If you found this video helpful, please give it a like, subscribe for more content like this, and let us know your thoughts or any questions you have about CCTG in the comments below.